this will be the first question they will ask is, are you investing in this property? If the answer is yes, then let's talk. Otherwise, don't.
Welcome to the Power of Passive Income and How to Retire Rich with your host, Vijay Patel. Get your financial advice straight from the experts and learn how to take your first steps towards financial freedom. If you're ready to retire rich, then listen up.
So a lot of people just talk about success, but we also want to talk about failures. Everybody has their fair share of failure, but we learn from it and, we improve ourselves. So if you can please share some of that learning, we would appreciate.
Sure. That was, I think I alluded to this when we were talking before the podcast started, but I had a lot of learnings early on. When I turned my primary residence into a rental, I thought because I was getting more rent than my mortgage payment that I was making money. And that's as deep as I thought about it. And, I realized that was really only the tip of the iceberg. And so, some of my early learnings, I would say I probably still made money on that first rental, but I made so many mistakes. I chose the wrong property management. The way there's just so many things that I did wrong or just wasn't aware of. And so that was one of the reasons that I stayed solo for so long, because I wanted to get a lot of those mistakes out of the way. And I'm a firm believer that you got to fail, because that's where you learn. In the engineering world, if you talk to two engineers that both work on the same area, if somebody has a lot of problems in their career, they're going to learn a lot more than the guy whose projects always went
Yes.
without a hitch. So that's how I think about failure.
It's all about problem solving, especially what you learn from failure is a problem solving better than somebody else's. If your life is smooth, you don't know the problem solving, right? You know the right way of doing, but you don't know what if the problem, if things go south. And at every point of any business, no matter if it is real estate, engineering, or even healthcare doctors, there's always ups and downs. If there's something, a new regulation or new things that will, can change industry entire overnight. So, but let's discuss about one thing is there's a lot of people out there trying to be a syndicator, right? So as a passive investor, what are the qualities they should look for if they're trying to invest in a deal, or how can they make sure that their money is secured?
Well, so, I mentioned reputation earlier and experience. When I first got started, that was the biggest barrier to entry. We had a lot of interested parties, a lot of phone calls, but when it got down to, how many deals have you done like this? And the answer was 0. That usually eliminated a lot of potential prospects. And so, early on we had to take a lot less equity and, provide higher returns in exchange for the confidence. But, slowly over time, if you act as if you approach multifamily like you're a fiduciary with your investors' best interest in mind, I don't think you can go wrong. And it's always putting them before yourself. And that's one of the reasons that we always invest in our own deals, so that our investors know that, hey, we have skin in the game too, and we believe in this deal so much that we're putting our own capital into it.
Yeah, I think one thing that every investor I think likes is a skin in the game. If you are taking my money, are you investing yours, right? Because if it's your mouth is where you are saying, right, kind of thing. So I think I truly believe in that too. Is people like to see some skin in the game. I have closed so many deals just based on that. The first question is, are you investing in the deal? And the question will usually come from some experienced investors. The first question, or some older people, because they have so much of experience that this will be the first question they will ask is, are you investing in this property? If the answer is yes, then let's talk. Otherwise, don't even talk. Like, that's it. Conversation is over, kind of thing. So yeah, I think I would like definitely relate that is like sincerity, I would say. Your investor has to see like sincerity of like your work, like how serious you are about your money and the work that you're doing. Do you know your work? Like, do you know your numbers? A lot of syndicators are out there like inflating the numbers, like hyperinflating the numbers, right? So like true investors will know these differences, but somebody starting out might not know. So I think a background check, a history would help at least to read that. And then, like as you invest, we can definitely, like it's kind of getting pro at every point, like whether it's you're doing it in a management side or you're doing investment side, then you know that, okay, like, this is the market. If this is the property, yeah, it makes sense, kind of thing.
Yeah, and a lot of times you can look at the incentives for the GPs in a deal and kind of get a sense of where their priorities are. And for instance, and this, I'm not knocking anybody else's business model when I say this, by the way. But the way that we structure most of our deals is we don't really make a lot of money up front. We don't take large acquisition fees. We don't nickel and dime investors for every little milestone. We basically don't even get paid very much until they get all of their original investment back. And so we kind of think of it as, the pot of the gold at the end of the rainbow.